afternoon, everyone. Welcome to the Trading Talk, the Uncensored live Q&A session. My name is Danny, and I will give you the webinar today. So let's begin with a presentation. We'll see how the webinar is structured, and then we can begin. So the first part will be the previous questions. The true purpose of this webinar is live Q&A, live questions and answers. That means that you guys can ask along the way whatever questions you have, regardless the topic that I'm teaching, and just get the answers on the screen. Okay, let me just make sure that I am showing the. Okay, great. So the previous question segment looks like that. Okay, we're going to go through the questions that are common questions coming from trading from different webinars. The second part will be more like I said, a true purpose, which are questions that you guys can ask, and I'll be pasting down here. Along the way, we have this slide is a bit more informative. So we have the common questions, we have the questions that you guys will be asking, and we have this slide here is a bit more informative. So I'll be sending you some links to save you the trouble to find those by yourselves on the website. And that slide here is mainly to use it as an example to emphasize technical analysis, understand a bit better using examples. But I have a feeling, let's look at the questions. Anyway, I have a feeling that we're going to do this on the chart. So there is really no need to do that. And that one is a surprise. We're going to get to that at the end. Okay. It's also important to note that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or suggestion. Now, the most probably frequent question that we get is there is a possibility to get a recording of our webinars? And as I say again and again, it's very, very simple to just go to our YouTube channel, just pick whatever whatever video you want, and just watch it in your own pace with subtitles, and very, very comfortable there. I'm sure there is a way to download from YouTube. Again, I'm not here to tell you how, and we're not here to do that, but I'm sure it's not that difficult to get a recording from there. Yeah, so that's basically it. This webinar, of course, will be also recorded and uploaded to our YouTube channel as well. Let's have a look at the questions. Okay, so like I said, we are going to begin with the previous questions, with the common questions, and let's just review them. So the first one is it recommended to trade in a group? Okay. The second one, first we're gonna read them all down, and then we'll pick which one to begin with, because it might make more sense to begin with something simpler and then to go down the line. So the first one, is it recommended to trade in a group? The second one, is it better to trade on a smartphone or on a computer? Okay. The third one, how to improve fundamental analysis and apply it to trading. Okay. What is a good ROI for busy people? But okay. All right. So what is, first of all, this one is, of course, turn on. Of course, I hope that this is what the question is referring to, right? What is a good return on investment for busy people? Busy people. Let's say that, let me just quickly, maybe everybody's busy, right? Well, we'll see. Okay, we'll get to that. Let's just take the first one. Oh, what did I do? Okay, let's just take the first one. We'll have a nice notepad down here. And let's drag it to the right. Okay. Is it recommended to trade in a group? What do you guys think? Is it recommended to trade in a group or alone? What do you think? Let's find ourselves something to look at. What Bitcoin looks like. So what is the advantage Just a second, guys. Right, so what is the advantage using a group to trade? Okay, downsides and upsides. What do you think? Alone or with a group? What do you think? What are the advantages with a group? If I'm with a group, I have more people. It means that I get more opinion, right? What else do I get with a group? If I'm trading with a group, anybody has any idea? Motivation. All right, Suhail. So Suhail, motivation. Well, okay, no problem. Maybe motivation. Okay, sure. All right, what else? We have more opinions. Of course, in the group, I can some may say this, some may say that. Then I get more opinions. I get motivation. Maybe okay, no problem. What else do I get from trading with a group? Anybody? It helps you be more okay, Ian. It helps you be more focused. Maybe okay, no problem. More focused in trading, or maybe help to focus on trading. Okay, we'll write it down. I'm not sure if it's the core idea of trading with a group, but definitely could be something. All right, if I'm let's say I'm doing something else and somebody from the group is maybe given an idea about something and maybe it contributes to me and I can trade with that, maybe okay, no problem. What are the advantages to trade alone, not with a group? I make my own decisions, right? So that means that I can make my own analysis. This is something that I can also do with the group, right? I can use the group. Listen, the question here is nice. Is it recommended to trade with the group or not? Of course, there are many upsides if I'm trading with the group: motivation, community, opinions, analysis. All of that is great. But at the end of the day, the decision will be mine still. So, well, I don't think there is actually anything bad trading with a group, to be honest. I can't think of any downsides. Maybe if somebody in the group gave me a bad advice and I followed that bad advice, so I can say it's less. No, I don't think there is any disadvantages trading with a group, as long as it's good and it contributes something, and of course you don't have to pay for that. Yeah, well, it really depends on the type of trader that you are, right? I can be in a great group with great signals and to follow what they say and make a lot of money. I can be in a good group, and if I'm not going to do follow the instructions, maybe I'm not going to do well. Yeah, it's very dynamic. It's very dynamic. So the bottom line here is it's recommended to trade with a group. Yes and no, but let's say yes. If the group provide positive support and assistance and can go along with your lifestyle. Now, why am I saying that? Because I might be following a group that trades, I don't know, 8 hours a day, but I have to work 8 hours a day. So is it recommended to trade with this kind of group? Maybe, but I won't be able to do what they do. So what's the point? Okay, so it's very dynamic. I think this question is very open, but like I said, I gave my opinion about that. I think it's quite mandatory to be able to do things by yourself and to have the knowledge to do by yourself and never to have dependence on any other factor in life that you want to do something, but you rely on a group. Okay, so this is something I wouldn't do. But if it's just as an additional information, yeah, why not? All right, is it better to trade on a smartphone or a computer? Okay. What is it? What do you guys think? Is it better to trade with a phone or on a computer? What are the advantages that we have with a phone? Can I take a computer anywhere? If it's not a laptop, can I carry it anywhere and trade anywhere? Okay, excellent, or very good. So the phone I can take everywhere, the computer not necessarily, right? I often will have internet on my on my smartphone, but not necessarily with a computer. Okay, those are good things for the phone. What else? Yeah, that's basically the biggest advantage is that it's mobile and it allows you to just do it whenever you want, right? A computer I can pull out of my pocket. Again, that depends how big my pockets are, but yeah, but in general, yeah. So the biggest advantage with the phone is just so I can carry it anywhere and trade anywhere. But if I'm looking at the overall stats, okay, trading on the phone is usually on the go, right? Not always, but again, that's the true purpose of why I'm trading on the phone, because I want to do it on the go. If I'm at home and I have my facilities, why would I trade on the phone and not on the computer? Does it make sense? Now, what are the advantages that a computer have? So we have multiple screens, right? I can see things much bigger. I can do analysis on one screen and I can do trading on the other screen. I can have 3 screens. I can have as many screens as I want. Computer also lets me customize the chart in a way that unfortunately I can't necessarily do with any device, right? And it allows me to maneuver very, very easily. Okay, now again, I am referring to the average smartphone and to the average computer, right? Computer might be different. A smartphone might be huge and very, I don't know, very sophisticated. But the ordinary ones, you're going to see things bigger on the computer screen rather than the phone. Okay, now I don't know in comparison what performs better, because the computer can be slow and the phone might be fast and vice versa. But in terms of physical ability to analyze things at the same time, to look at the different charts at the same time, to grasp some, perhaps I want to read. Okay, I want to also do, there was something here regarding fundamental analysis, right? You see, so for instance, if I want to read something, I want to see the impact on the chart. So with the phone, how exactly am I going to do that, right? So everything has an advantage and disadvantage. Well, most of the things, but in terms of this comparison, is it better to trade with on a smartphone or on a computer? I think I'm going to vote for the computer, unfortunately. Okay, well, not unfortunately, frankly, a computer just provides you with more physical ability to do things properly. And yeah, but trading on a phone is not too bad. I have to say that the app itself, okay, we have an app. This interface is called the Web Trader. Okay, the Web Trader. AvaGo is the app. It looks amazing. Okay, you download the app, it looks almost the same as this interface. It's true there are some features here that you may not have with AvaGo, but in total, it's just as amazing. I would recommend, of course, that if you're trading either on the phone or on the computer, to take a moment and to really enjoy the process. Okay, not just to do things on the go. If I'm holding a phone in my hand and I'm just click, right, clicking buy or sell, yeah, I shouldn't expect something logic will happen. All right, great. Is it better to trade? So overall, I would say computer lets you see. Let me just write it down. Smartphone gives you the ability to trade on the go. Computer allows you to do few things simultaneously, right? And the so we have smartphone gives you the ability to trade on the go. Computer allows you to do a few things simultaneously, such as analysis. Well, I don't want to put it down because some phones do they are like a computer, right? There are crazy phones today at the size of a screen. Well, I don't know if it's the size of a screen, but they're sophisticated things, so I'd rather put something else on. Smartphone gives you the ability to trade on the go. That's absolutely right. On a computer, you might see things more comfortably and just manage things more properly, okay? So from the other end, we have this one. Let's just make it this way. Size is it? But it's really, what really matters is if you're trading good or not, if you're using a good strategy and a trading plan. It doesn't really matter which device you're using, but let's say okay, a computer might let you see things more comfortably, right? And yeah, that's basically it, more comfortably. And in general, I would like to say that the state of mind trading on a computer, when you're sitting down with your sheets next to you and you're ahead of, like I said, you have few screens, you're doing analysis comfortably, you're not on the go or any other state of mind. I think it's a different world. But these days, people do things differently. All right, how to improve fundamental analysis and apply it in trading. Great. So fundamental analysis, let's begin with first understanding what is fundamental analysis. So we have two types of analysis. One is technical analysis, one is fundamental analysis, right? Fundamental, yeah. Okay, sorry. Yeah, technical analysis will be things such as averages, statistics, what else? Different levels. Okay. What else? Well, you've understood the idea. Everything that is in the chart, okay? Basically information based on what is in the chart. Okay, fundamental analysis will be the opposite. Therefore, information based on what is outside the charts. Okay, and that could be any kind of news, events, articles. Now, how exactly am I supposed to improve my fundamental analysis and apply it into trading? So, the simple thing to do, first of all, we have a very nice news section here. You can click and you can enjoy all kind of articles regarding the pre-Asia market or the crude oil or anything else, right? Indices. And the second thing that almost any other any other trader does is, of course, the economic calendar, which can be found here under Discovery. So we're going to go to Discovery and go to Economic Calendar. Okay, and how can I improve? So let's suppose we are going for, just a second, let's take something that people know. Let's say the NFP. Let's go with the NFP. Just a second. All right. So this is something coming up on the 2nd, which is not this Friday, it's the next Friday. Okay. And you can see that the economic calendar is structured in a very accessible way. We can always see the previous forecast. Actual is something we only get to see when it already took place. So of course, a future event will never have an actual because it it didn't happen yet. But we can have an idea what to expect. Okay, so this is what we had last time, 136. Okay, as you can see, this is the result from last time, so we can just compare it. Okay, 136,000. That's the amount of new jobs applied in US, regardless, excluding the agriculture sector. Okay, this is why it's called a non-farming payroll, because it's excluding the farming sector. And as you can see, this is the last result. This is what we expect. So it seems like we are looking at an increase. Yeah, we all understand that, right? 136 to 150, we are looking at an increase. And when it will take place, we will also have an actual. Now, how can we apply this to our trading? How does first of all, what exactly am I looking at here? Okay, so we have an event. This is obviously something that is reoccurring and not just a one-time event. It's a report, okay, that we get every month. As you can see, usually the first Friday of the month. This is why it's on the 2nd, as you can see, 2nd of August. This one was on the 5th. Sometimes it's a little different. Okay, and yeah, so how can we apply this into our trading? What can we understand from that? Let's suppose the actual comes higher. Okay, let's jot it down. Just a second. All right, so we have the previous, we have the forecast, right? And we have the actual. So let's jot down a few scenarios. Let's see, 136. Okay, forecast is 150, right? 150. Okay, so if actual, sorry, I'm going to expand that. This bit I want to keep. Maybe we can somehow save some space. There we go. Okay. Let's say that the actual comes higher, a little higher. Okay. If actual is higher, okay, USD equals what? Let's have a look at the report, guys. What is this report telling us? Okay, it tells us that last month we had 136,000 new jobs. Okay, and now we're looking at 150,000 new jobs, right? Okay, now the obvious scenario here is if actual goes higher, sorry, if actual comes higher, what does that mean for the USD? What does that mean for the economy? Do we expect the dollar to strengthen or to weakening? What do you think? If there are more jobs circulating, flowing in the economy, what do you think? Is it good for the dollar or is it bad for the dollar? Very good, Arya. Of course, it's good for the dollar. So if it's good for the dollar, what do we expect that will happen if the actual is higher? Dollar equals can go up, right? We're not going to put it down because things might be different, but logically, USD can go positive, okay? Can USD, let's say, can react positively, okay? Now, if the actual comes exactly as the forecast, what do you think? If the actual is equal to forecast, what does that mean for the dollar? Will it still go up or it will go down? What do you think? It's higher than before. Yeah, so Chris, you're saying that it's higher than before, and obviously it will make the dollar to go up. Unfortunately, I disagree. The dollar can strengthen. I agree with you completely because it's still higher, right? Still higher than before. Yeah. So of course it has a possibility to go up, but keep in mind that things doesn't happen immediately as we expect, right? So that means that if I'm prepared with a buy and the NFP comes higher, not necessarily higher, but as much as the forecast, and I'm with an aggressive buy, I might be able to take a flinch. Okay, if the dollar weakening on the same spot for a few minutes until the market will actually react, I might be in a problem. Okay, again, it's a possible scenario. You have to understand that fundamental analysis is not an exact formula. Okay, it's not like chemistry. Okay, the market lives in his own pace and things can happen differently, but this is logic. What I'm teaching you here now is logic, because NFP is the non-farming payroll, and it means that there are new jobs applied to, as you can see here, 136. Sometimes it's a little higher, sometimes it's a little lower, but the game here is to compare the result to the previous and to the current state of the economy. In other words, even if let's suppose, let's take something in the middle. Okay, even if I'm looking at 140, okay, which is lower than the forecast, yeah, but is it still higher than before? Absolutely. So that means that we're having still an improvement, right? Great, great. So we looked at three scenarios so far. Higher than the forecast, which obviously can make the dollar go higher. Equal to forecast, which again is like Chris and others replied here, it's still it's higher than before, and an actual that is lower than the forecast, but again it's still higher than before. What happens if, God forbid, the NFP comes in 120? What do you think? The dollar will respond positively or it will decline? What do you think? Is that a good number in comparison? Okay, so many people here that think that the dollar can respond negatively, which I don't know if I would agree because there are other intervals in the economy, but it does make sense that the dollar is not going to strengthen after a report like that. Okay, when we understand that last time it was 136, we are looking for 150, but we got something that is lower in significant percentage, right? So this is very easy to understand, and not all the events, the reports work this way. Sometimes a bigger number can show us a decrease. Okay, for instance, if we're measuring inflation and the number in inflation comes higher, so if the inflation is higher, is that good for the currency? Absolutely not. Absolutely not. So it's not always to go for the higher number. We got to know what the report is telling us. But in regards to the NFP and what I've explained now, it's super simple to understand. And there are probably thousands of videos. Well, I don't know if thousands, but I'm sure you can find many, many videos of other fundamentals like CPI, PMI, and so on that can definitely explain to you how to utilize with it. This is a nice example to use. The nice feature that we have in here in this economic calendar is if you click here on the calendar, you can actually place it in your calendar. Then you'll have a nice reminder before the event, and you can prepare your analysis before you're starting your trading session. All right, that's regarding that question. I believe this will suffice. Let me quickly have that, even though this is the technical analysis bit, but still, this can't hurt in any way. That's why we are going to have it here as well. All right. All right, so I'm just going to put here a quick description to the idea of what we did now. You can begin with finding an event-related event or report or any occurrence, to be honest. Find an event or a report related to what you're trading and analyze accordingly via the economy calendar. Now, everything that I said till now is my own personal opinion based on research that I did and, of course, the statistics that I have. Things can happen differently, and you guys can improve your fundamental analysis in really any other way you desire. You can find news on YouTube. You can find news. You can see the news on TV. You can what else? Google. You can Google whatever you want. You have Yahoo Finance. You have Bloomberg. You have you guys. You can't imagine how accessible the information is for us these days. Okay, a decade ago, that was much more difficult. But now everything is accessible. You can really get information about, especially companies that are traded, right? You can. Let me show you. But we got lazy. We got lazy during the years. And fundamental analysis is something that not everybody does, and that's very unfortunate. So let's suppose I want to look at Tesla. Check Tesla. Look how nice everything is. Honestly, this is really, what do we need more than that, right? You can improve your fundamental analysis in any way that you want, but in here, what I showed with the economic calendar is just a very basic way, which I think people can understand. But it doesn't necessarily, that means that this is the only way. All right. Any questions? I'm so sorry, I forgot to ask. Do we have any questions about anything that I've explained so far? Is there anything that doesn't make sense? Not always. Okay, so Cliff, you wrote down that you're not always focused trading on the phone. Would I recommend you to trade with a computer? The answer is absolutely yes. Okay, Chris is asking specifically, he typed, he's not focused trading on the phone. Would I recommend to trade with a computer? The answer is absolutely yes, without a shred of doubt. It's exactly what I've explained. If you're on a computer and you're trading and you're doing it properly and you're comparing it with trading on the phone while you're doing something else, of course, I would recommend you to use the computer or anything else that helps you make more focused. All right. What is a good ROI? What is a good return on investment for busy people? Again, I'm a bit, this definition is a little funky, but we'll have it as it is, okay? Occupied people, yeah, busy people, occupied people, we're all busy, right? But okay, so return on investment, ROI. Okay, why is that important to have an ROI? Why can't I just say, let me make money in general? In general, without any specific date, without any specific amount, just like a free spirit. What do you think? Is that a good idea, or I should have an ROI? Why should we plan an ROI? Anybody has any idea? Why should we plan? Why can't I make money in general? If I take here a sell now, let me switch to a sell. If I take a sell now with silver now price is 27,568, and let's go for a sell, right? So we have a sell that is supposed to be an arrow pointing down. Yeah. If I take a sell now, will I make a profit? What do you think, guys? If I take a sell now and silver goes down a little, will I make profits? Oh, sorry. If if I take a sell, if sell and price goes down from 27 to 578, will I make profits? The answer is yes. As long as I cover the spreads and I have it moved a sufficient length to cover the spreads, I'll be making profits. How much profits? Equals question marks. Now, let's suppose that I'm going to take a sell now. Okay. And silver is going to move. Oh, something happened with the rectangle. There we go. Let's suppose it moves to the green line. Sorry, let's say, yeah. Let's suppose that it's going to move $1 down, right? Okay. Is that good? Let me also simulate with the take profit. What I did here is I marked the take profit, which is a pending order that allows me to close the position automatically with a profit without me being on the computer. Okay, let's suppose that reached to the green line. Okay, green line, green line. This is the green line, right? And it reached from the now price. In other words, okay, profit target price equals 26.6. All right. Let's make it simple. All right. Now, I'll be making $100. Okay. So my possible profit is $100. Great. I would like to tell you guys that those are weekly candles. Therefore, each candle here is a weekly candle. Therefore, if I'm pointing in here and I see that this is the 22nd, obviously that's the beginning of this week, that's the beginning of last week, this is 2 weeks ago, 3 weeks ago, 4 weeks ago, and so on and so on. In other words, I have a feeling that, of course, I can rely on much more than a feeling, but we're not going to do too much analysis now because that's not the point of this question. But let's suppose that I go with my guts and I think it can go to 26.6. Okay, let me lower that a little bit. 26.6. That's, let me make it a round number. There we go. Okay, and that one as well, 27.6. Okay, now we have a flat 100. And I'm asking you guys, is it good that it will get to here and I'll make $100 in a week? Okay, 1 week to make $100. Is it good? What do you think? Is that okay, guys? What do you think? Anybody think that this is not good? It's 1%. Yeah, you are correct, William. This is 1%. How is this 1%? Let's show the people how much $100 out of 10,000 in percentage. Let's see. So we're going to take 100, right? Divided by 10,000. and multiply that by 100. Okay, you can also understand that if you multiply 100 by 100, then it's 10K. Yeah, 1%. Okay, 1% in a week. So if I make 1% in a week times 4 weeks a month equal 400 or 4%. Now, is that a good investment? Is that a good return for busy people? For busy people, I don't really understand. Well, I guess what this question is trying to understand is what is the realistic number, right? Of course, the return that I would want is to make $1 million tomorrow morning, right? That's probably what I would want. I would want to make $1 million on this position and basically retire, okay? But what this question is asking us to do is to find a realistic number in my capability, and not just a far-fetched number that is, imaginary. Okay. Now, when I targeted 26, it doesn't really matter why. Okay, we're not gonna, again, we have 10 minutes, so I don't have enough time to teach you the analysis that I did to understand this, to come to this conclusion. Something to do with the reversal here, and okay. But the idea here is I would like to know if this return on my 10,000 is something that does it make sense, or I'm, it's maybe it's too little, maybe it's too much. We'll see. Okay, so to take this position, in general, it seems that I need $275. Okay, so regardless the money, it seems that I can take this position. Okay, let's suppose that I'm not happy with the 100 and I want to double my sorry, I want just a second, guys. Apologize, I nearly lost my voice for a second. Let's suppose that I would want to make 10,000 on this position and not 100. First, let's jot down the numbers, okay? Let's see quickly here. 27,571. Okay, let's make it 27.6 times 100, right? This is the amount of units we have. That comes down to 2660, right? Let's quickly verify that. Maybe my head is going to mislead us. No, we are, see? Okay. And this is the value. Okay, let's divide the value by the leverage, which brings us to 275. Okay. All right, great. Margin. Actually, let me write it down. Margin impact, necessary amount to open the position. Okay, so this is just so I'll know if I'm be able to take this position or not. Now, I'm looking at a return of a percent. It seems like this position is something that I could do, no problem. Let's suppose that I wish to make on this position 10,000. Can I do it? Let's see. Let's increase that to a lot. Okay, now we can see that we can make 10,000 on this position, but that's very unfortunate. To take this position, of course, if I could take it, it would have been great. But to take this position, I need $27,580, which I'm very far away. I'm not even third. I'm third, a little more than third to take this position. So financial capability wise, I'm not near close performing this to take this position. If I lower it to 0.1, yeah, instead of making 100, I can make 1,000. Again, I'm only looking at the question here. There are other things to acknowledge beside the margin impact if I want to take this position, like risk money management and some other things related to diversification. Because at the end of the day, if I'm taking this position and I'm using 2.7 out of my 10,000, so I'll be left with so much margin to do something else, maybe to hedge, okay? But if I'm looking at the most basic forms of calculations, whether to take this position or not, is my capability to either take it or not take it. Okay, so obviously this one I can take. It requires 275 out of 10,000. It's not a problem. That one I can't, obviously I can't take, I cannot. And that one I can. Okay, but even that one is something that I might consider, and I will explain to you why. Okay, now this is, as I have explained, this is 100 out of 10,000. That's 1%, and if I do it consistently, I am at 4%. Okay, 4% only with silver. Only with silver. So silver equals, let's say 3 to 4. Not necessarily, I'm not necessarily going to hit my goals all the time. Let's say between 3 to 4%. Let's suppose that I also trade Tesla, right? We saw Tesla today. And with Tesla, I also make 3 to 4%. Let's suppose I also trade what we saw earlier. Let's say Nasdaq, right? Let's suppose I do Nasdaq. I also trade Nasdaq. I make also for 3 to 4%. Let's say another one. Okay, Apple as an example. Let's say I make another 3-4%. Okay, altogether, so we have 12 to 16%. This is with 4 assets, 4 instruments. What I'm trying to tell you here, the ROI depends on a few things. A, your ability to basically maneuver with your strategy, right? So, and the second thing is your financial capability. If you practically have enough margin to acquire this many positions, right? So for instance, we're looking at this position 1 week, we're using 275, no problem. When I'm closing the position, it frees up my margin back. I have more margin available to trade again. Okay, I'm done using my margin to occupy the position. When I close it, it turns back, it goes back, then I could use it again. Okay, even if I have enough margin to diverse, I can diverse. I don't have to trade only one asset. I can increase or decrease whenever I want, right? I can have my position next time, instead of 0.01, I can make it 0.02 and then to aim for $200. Okay, but the point with designing this is to be able to measure approximately where are you heading, how much money are you using, and obviously what are you looking to get in return, right? Just like anything else, if I'm putting my money into something, I want to know how much I'm getting in return. That needs to be included in my strategy. Now, it's not mandatory. This is a question we get all the time. Danny, is it mandatory to have? No. None of this is mandatory. Not to have a plan, not to have a strategy, not to do analysis. None of that is mandatory. However, if you don't do that, don't expect things to happen with your logic. Yeah, because the market dances in its own way. All right. Yeah. So for B, again, I didn't. It doesn't really matter if you're busy or not. It doesn't matter, right? You saw what I demonstrated for you guys. It took me 3 minutes. 3 minutes to show you this. So even if somebody is busy, I'm sure 3 minutes. Actually, if somebody is busy, what I would recommend is to make a plan and to dedicate, if you're busy, just dedicate half an hour once a week to begin with. Okay? Every journey, who knows the rest of this? Every journey begins with, you guys know that phrase? Let me paste it down. I want you guys to paste it down. How can I put it down? What is a good ROI? ROI can be determined according to financial capability. Okay, according to financial ability, free time, and trading level. Okay, let's just take that bit. It doesn't have anything to do with if you're busy or not, because even if you're busy, you can still find another stream to make money out of, right? You can do copy trading as an addition. You can do social trading as an addition. You can swing as an addition. You can, again, the solutions are many. The solutions are many. It's just a matter of not being lazy and really taking action. And what I was about to say, a journey begins in a single step. Okay, every journey begins in a single step. All right, so in our last minute, I'm going to share with you guys the links on the chat so you guys can enjoy that. It will save you the trouble to look for them in the website, and I really hope that people here learn something new, especially people who asked the questions. And also, I wanted to show you how to access that from the website. Okay, see in here, you have the I don't know how to call the play button or whatever you want to call it. See the education button, the academy. It will take you to the academy. Okay, in here, if you click to tutorials, it will take you to tutorials, and it's going to show you here a library with a lot of very useful videos which you can just watch whenever you want. Okay, it's super useful and it's free content for you to use, so of course I wouldn't miss it. I wouldn't miss anything that in here on the left hand side. You can find all kind of useful things. Before we say goodbye, I would like to give you guys the Q&A benefit, so you can give it to your senior account manager and he can give you a one-on-one premium market review. Let me quickly paste it in here. Okay, this is your special promotion code. So like I said, guys, we are done for today. You can pick up your code, just copy and paste it, keep it in your notepad and give it to your senior account manager and get your one-on-one premium market review. Beside that, I wish you all best of luck with trading. I hope you enjoyed and have a good day.